Good morning, traders. Today is the 2nd of April 2021. My name is Neville Hornsey, market analyst with YouTrading. It is also Good Friday, so a lot of the markets are actually closed today. So I thought I'd just take a quick look at the New Zealand dollar versus the US dollar, as there's some interesting price action happening. Okay, looking at the weekly chart of the New Zealand dollar versus the US dollar, you can see all the way back to sort of the early 80s. This 0.7 level in black, this black horizontal line, has been tested, and it's an important level in terms of support and resistance. Here it is resistance, here resistance, again resistance. But then when we do actually break through, it then becomes like a mean reverting sort of trade where it'll go to test a little bit higher towards the 0.82s, come back through the 0.7. We even went down to 0.5 with the great financial crash here. And then after that reflation trade, we got all the way up to 0.8. That became resistance again back in like 2015. But recently, between 2016 to present day, 0.7 has been the sort of median line. Obviously, the New Zealand dollar is highly correlated with the US dollar. And the reason for looking at the Kiwi today is because the US dollar is above its 200 EMA. It's also above its Ichimoku sort of cloud, which I use for guidance on support and resistance. And yesterday we had a bit of profit taking. We had a slight pullback down towards this 200 EMA, but we did hold above. And with the good US data yesterday, we had like some great US ISM data for the manufacturing PMIs. We've also got expectations of a build in the non-farm payrolls. The highest estimate for non-farm payrolls would be around 1.1 million, and the low would be for 115,000. But previously we had 380,000, and this sort of month we're expecting to see around 647,000. So if we get there or above, that would be good for the US dollar. Obviously, if we get slightly increased average earnings, market expectations for a slight sort of decrease in those average earnings. But if we can get an increase, that would be really bullish. And obviously, if the labour force participation was to increase, then that would be good because we're still quite low on that percentage. Yesterday's price action, after all the sort of good manufacturing data, saw the S&P break 4,000. We also had a big rally in the NASDAQ as the US yields were coming down. So if we can go back to the New Zealand dollar, we did actually see the dollar coming off. So New Zealand dollar was able to rise a little bit. The 200 EMA here, which has acted as support on a couple of occasions now in the past week. We did have this sort of range, which then had a sort of blow off top for a couple of days back in early March. And since then, we've been making lower lows and lower highs and a downtrend. So what I'm expecting now is for price action to be supported by the 200 EMA, go back up to previous support, which is now hopefully going to act as resistance. And then for this breakdown, retest, and then continuation to the downside to then like test into this sort of balance area around 0.66. Where I'm wrong is if all of these sort of areas here act as support, and then we actually break through this previous support. So it doesn't actually act as resistance. We just trade straight back through it. 0.7 is here. And if we get up to sort of 0.728 to 0.73, we're taking out these swing highs here. And my bearish idea would be invalidated because we'd then be making higher highs and higher lows in an uptrend. So I'll be watching out for this sort of zone here, which was support. I want to see that act as resistance now, and then that would be my sort of trade idea. Okay, be careful today. The markets are pretty quiet. Don't get caught up in the volatility on Friday. You know, this is on a daily time frame on the New Zealand dollar chart, so there's plenty of time to get in next week. All right, take care, and I'll speak to you next week.